Welcome to the video devoted to the ethical dimension of the decisions made by a financial manager in a business organization. As you already know from the module devoted to the role of the financial manager, the financial decisions of a company can impact many areas both inside the organization and within its wider economic environment. As a result, unethical decisions which may seem beneficial from the point of view of a company's profitability may simultaneously have a negative impact on certain groups of stakeholders, such as local communities, suppliers or employees, and therefore may ultimately have a negative impact on the company itself, for example, through adverse publicity. So, unethical decisions can prove detrimental to the process of value creation by a business, and it is therefore essential that companies incorporate the assessment of ethical considerations into their decision-making processes. It is important to note that all corporate actions have to be ethical, not only at the individual level, but also at the level of the organization and society as a whole. This means that it is not only the individuals running the business who have to apply ethical principles to themselves and their own behavior, but also that the entire organization has to exercise its legal and other obligations with respect to all groups of stakeholders, as well as towards other parties and social groups not directly associated with the company. Accordingly, at a corporate level, ethics is the way a company approaches potential stakeholder conflicts and corporate governance. Like all other decision makers in a firm, it is essential that a financial manager ensures that all actions and decisions taken within the confines of their area of responsibility are ethical and properly anchored in good governance practice. The ACCA Code of Ethics is a set of fundamental ethical principles which have to be followed by any professional holding the ACCA title. The code may naturally be used as a guideline to support the decision-making efforts of all financial managers. The main principles contained in the ACCA Code of Ethics are integrity, which relates to being honest and straightforward in all business relations, and objectivity, that is, avoiding biases, conflicts of interest, and other external influences which could potentially take precedence over professional business norms. What is more, the ACCA Code of Ethics requires members to apply professional competence and take due care of all matters assigned to them. This means that finance professionals are obliged to maintain an adequate level of professional knowledge and skill, ensuring that their decisions are properly grounded in current finance, legal, and technical developments. Finally, the code obliges members to respect the confidentiality of information acquired in the course of professional relationships, implying that they may not disclose such information to third parties unless disclosure is required by law or regulation. In particular, no confidential information may be used for personal benefit, such as insider trading, or for the benefit of third parties. A company's approach to ethical issues associated with financial decision-making should be included in its financial policy, regulating the behavior of all finance professionals working for the company. In other words, an ethical financial policy should incorporate a code of conduct, typically covering such points as acting in accordance with the ACCA principles and disclosure of any possible conflicts of interest to a company officer in charge of ethical issues. An ethical financial policy should also ensure that the company's financial practices, including accounting, internal controls, and auditing, meet the highest standards with respect to honesty and transparency, and that they comply with external norms and regulations. What is more, an ethical financial policy should promote ethical behavior among all employees and encourage personnel at all levels of corporate hierarchy to constantly increase their level of knowledge and awareness of best practices. It seems obvious, however, that even the best financial policy will not ensure a company's ethical behavior unless financial decisions are made in accordance with it. In order to encourage employees to apply the policy and its principles to everyday decision-making, a company may put a number of measures in place. First of all, employees should confirm that they actually understand the company's ethical principles and commit to act in accordance with them. Furthermore, a company may provide employees with additional guidance related to the practical application of ethical norms in real business situations, and designate other resources such as hotlines, with the aim of helping employees make ethical decisions. Finally, a company should implement mechanisms requiring employees to immediately report all cases of potentially unethical actions taken within the firm.